Jerome Powell's second term as Fed Chair and the future of your wallet. Federal Reserve Chairman Jerome Powell is poised to keep his title for another 4 years, following Joe Biden's announcement that he would nominate Powell for a second term on Monday. Biden also announced a new nomination for Vice Chairwoman, current Fed Governor Lael Brainard, who faces a rockier path to confirmation and is also viewed by analysts as potentially more dovish on inflation. If confirmed by the Senate, what will Biden's Fed picks mean for America's paychecks, mortgages, and stock portfolios? On the latter issue, some analysts and Powell supporters say the stock market has reacted positively to Powell's steady hand and provides much-needed stability during these uncertain times. The two nominations come at a crucial time. Inflation is at the highest level in 31 years. Americans are paying more for just about everything from gasoline to groceries, which increased by 6.1% and 1% last month compared to September respectively, and are up nearly 50% and 54% since last October. In separate remarks delivered alongside by Biden on Monday, Powell, 68, and Brainard, 59, said they are committed to using the Fed's tool to help lower inflation and alleviate the toll it has taken, especially on working-class Americans. Many analysts and economists see Powell's renomination as positive for the stock market. It provides continuity at a crucial time, and regardless of who Biden nominated, the Fed was inevitably due for some policy changes. The Fed that had been providing accommodation is slowly starting to withdraw it, and that portends heightened stock market volatility, more modest real estate returns, and higher borrowing costs. Powell's renomination also likely means that the Fed will continue to distance itself from regulating digital currency like Bitcoin, which the central banker has said that he would not move to restrict. Even though Powell has been criticized by predominantly Republican lawmakers for not doing enough to curb inflation, it's likely that a Powell-led Fed would not be willing to tolerate the persistent inflation overshoot we expect. Powell's renomination also likely means that the Fed will continue to distance itself from regulating digital currency like Bitcoin BTC, which the central banker has said that he would not move to restrict. Brainard, however, could push the Fed to take a tougher stance on regulatory matters. What form that takes remains to be seen. While Powell is considered a moderate Republican, Brainard, who could serve as his second in command, is the only registered Democrat on the board of governors on the Fed. She has been a strong proponent of increasing regulatory oversight on banks and monitor the risks they take on and prevent potential fallout that could impact the overall economy. The Federal Reserve, under Powell's stewardship, previously announced it would begin to wind down a bond buying program designed to prop up the economy during this pandemic. I am confident that Chair Powell and Dr. Brainard focus on keeping inflation low, price stable, and delivering full employment will make our economy stronger than ever before, Biden said in a statement on Monday. Together, they also share a deep belief that urgent action is needed to address the economy risks posed by climate change and stay ahead of emerging risks in our financial system, he added. Earlier this month, the Federal Reserve, under Powell's stewardship, announced that it will begin to wind down a bond buying program designed to prop up the economy during the pandemic. Bond buying lowers long-term interest rates and has been a signal to markets the Fed isn't going to raise short-term interest rates. The Fed started buying trillions of dollars of bonds right when the pandemic struck in early 2020, eventually slowing the pace to $120 billion per month in June 2020. The central bank's balance sheet has topped $8 trillion. Last December, the Fed said it would continue to buy bonds until the economy had made substantial progress towards its goal of stable 2% inflation and a healthy labor market. On November 3, however, the Fed said it would reduce the pace of purchases by $15 billion per month in November and December, and said it judges that similar reduction in the pace of net asset purchases will likely be appropriate each month. The central bank stressed tapering is not on a preset path. The FOMC is prepared to adjust the pace of purchases if warranted by changes in the economic outlook. The 8-month tapering timeline gives the Fed time to see if inflation pressure subsides.